Okay, welcome everybody. My name is Hubert. Can I please get a confirmation that you can hear me and see the chart on the screen? Just waiting for some confirmations to come in before I continue. Good, there's the first one, thanks. Great, okay. So yes, welcome everybody. My name is Hubert Miranda. I'm here on behalf of Trading Strategy Guides to introduce you to the Strike Trader Elite system. I will basically give you an introduction to how the system works and sort of give you my opinion and view on it. So I've been asked to kind of review it and to tell you kind of the ins and outs of it. So that's what I will be doing. If you've got any questions along the way, please type them into the chat. Hi Dennis, yes, this is live. Definitely live, so you can ask me any questions you like. And yeah, so we'll just take it one step at a time, and feel free to interrupt me whenever you can't keep up with something or you've got some question, and we take it from there. Okie dokie. So basically the Strike Trade Elite system, as you see it here on the screen. I'll just switch you over quickly on my screen so you can see this better. Okay. So basically, the strike system is what I would call a momentum-based strategy. So what that means is that the key principle that it relies on is, if I go back to my chart, basically it's trying to catch the start of new momentum. So when price starts to move in one direction, it's trying to catch a signal by measuring that through its proprietary indicator down here, and we're trying to get into a trade once some new momentum direction is established, and the aim is to essentially aim for quite short-term goals, short-term targets. So they're quick in and out trades, and that's the core of it. And it sounds simple, and in many ways it is simple, but it doesn't mean it's a bad strategy. You've got to be aware of certain elements of how to handle it in order to not burn yourself. Okay, hi, Damien. I've just really started right now. Basically, the system I showed the screen here, it's a momentum-based strategy, which is good for small time frame trading. So it's good for 5 minutes or lower. And the reason for that is because we're really just trying to catch a kind of a push, an impulsive move of price, and we're not necessarily going to wait for price to move a huge amount in one direction. If it does, it's great, but because it's really based on this one core principle and the kind of the statistics around it as to how many trades go right versus how many trades go wrong, it lends itself for this shorter time frame trading. If you're going to deal, you can use it on bigger time frames as well, but I would then personally no doubt add extra refinement elements to it, which I will talk about later on. And but yeah, basically this is really the key of it. So it's great for short-term trading, simply because we're just looking for a reactionary move in the market, rather than a clear technical reversal or anything like that. Robert says there's no audio. Now, I think everybody else... Oh, hang on. People are saying that there's no audio. I see now 2 comments with no audio. That is strange, because you should hear me quite loud and clear. Can I get some more confirmation, please? Can you hear me now again, or can you still not hear me? Robert and Mahesh. Okay, get an okay from Arena. Dennis says it's good. All right, so guys, then the 2 of you who are not hearing me, you might just have to check your own audio settings, because everything seems to be fine here. Okay, so just let me talk you through the basics of it. The system basically predominantly consists of this indicator down here, which is the Stride Trader Elite Pulse indicator. And this will give us our momentum reading. So as you can see here, when price starts to create some upwards momentum, you start to get a reading above the 0 line here. So here the central dotted line is the 0 line of the momentum reading. And so once we get some momentum to the upside, you start to getting these green bars, and they're building up. And basically, with the reading that you see down there, it's kind of a complex mathematical structure that comes up with a reading, a visual reading, that's gauging basically the power in the moves. So, and as the move fades, like here, you start to see the upper move is slowing a bit. And eventually, when that gets too much, you start to see a drop here as well. So the reading goes down and the bars go darker. And anybody who's familiar with other kind of oscillator type indicators, that's right. It looks pretty similar. I think this indicator incorporates a few different mathematical features to gauge momentum, but they are in principle similar. But what this whole system indicator does is it gives you basically entries and stops and targets. So it tells you actually where to place pending orders, etc. And I'll talk you through that. So I just wanted to give you quickly talk you through the main indicator down here. So basically, you've got these rises and falls in momentum, and of course, if the momentum turns completely the other way, so here, then of course it drops below the 0 line and it turns red. Oh, hang on, I actually got to do that. Sorry, so if the video quality is very poor, the webinar will be recorded as well. And so if you find that the video quality is too poor right now, we will upload it with a high quality recording. So my apologies if it is a bit blurry, but there will be, you can go back to the video later on and it will be clear by then. And that was actually a good point because now I've started my recording. So this is basically the principle of this indicator. And if we go into the settings here, you get quite a lot of settings that you can adjust. But for the outset, if you just want to start off, just keep it as the default settings, because that gives you here a certain sensitivity in this momentum indicator. And then in terms of the system itself, how it gives you the signals, that's where these three settings here come in. So where it says here how many points for delayed entry is where the setting is of where you get a marker line of when to enter potentially a trade. And the initial stop loss value points is basically a marker line that tells you where to put your stop loss, and the initial take profit line is a setting of how many pips away the target will be set. And so as a default from the creator of the system, it's kept at 120 points, so there would be 12 pips delayed entry, 150 points or 15 pips stop loss, and 30 pips target. So there's basically two ways that you can go about this strategy. If I show you this here, either you rely on the statistics of it, and you really can say you can use the system without having to think, without having to really analyze very much, and just simply follow the signals that it creates, which I'll talk you through. So I'll give you the details of that. And that is fine. And obviously, it's understandable if you don't want to just rely on somebody's statistical claim. So you can, in a way, try out the signals on a demo account or on really small risk at first to see if you find that it works well enough for you. That's one way. The other way is you can include some signal refinement or extra filters, which I'll teach you, so that you will apply some of your own, a little bit of your own analysis to it, so you can essentially choose the best signals and filter out not so great signals. Okay, so I wanted to show you here, for example, on the pound US dollar. The way it happens here, I'm going to show you what these little lines mean, and it looks a bit complicated right now, but it's actually not that complicated. Basically, there's one indicator. So the indicator that you see down here, that's the pulse indicator. Signals with that. So if I zoom out here, you can see that you've got these lines happening here, which I'll clarify for you what they mean. And basically they will map out all the previous signals that appeared in a previous price action based on the settings that you've set it. So that's a really handy feature, because what you can do is you can choose a certain setting, you can choose the default setting or other settings, and then see, okay, how many trades would have gone right, how many would have gone wrong. And so to show you this with the latest example here, so whenever you get a vertical line like here, you get this red vertical line. This means that the beginning of the signal has started. So from that point, the system recognizes that there might be a trade setup. We haven't got one quite yet, but it's about to happen. And what it picks up on is that the minute the momentum goes, if I zoom in here, you can see that better. Once momentum starts to go in one direction and produces a reading beyond the 0.3 line on that momentum indicator, it will plot the line because it's the potential start of new momentum in one direction. And sorry, I'm just seeing here a question in the chat. Do you need to install the 3 indicators? Yes, preferably you install all of them. What I'm talking about mainly now will be pulse and signal. The push indicator is a little bit more, gives you more information, but I will briefly touch upon it, but not so much. So mainly the pulse and the signal indicator. Now JZ, sorry, I just saw your question now. I am answering it. I have been asked to review this strategy, so I have not traded it myself for more than 2 weeks, and I've just tested it myself. But I have been asked to basically tell people the ins and outs, introduce people to it, and tell you the ups and downs. So if you don't like that, I haven't traded myself, that's okay, but I'm telling you how it is, and you can take it or leave it. So back to where I was. So basically what we're getting the very beginning of new momentum here. And what then happens is that the system will plot a yellow line, and if it's a current signal, it will be a solid yellow line. Because it's currently an old signal, you will just get some dots here, yellow dots. But essentially, based on the settings that this indicator is in, so we're saying from the beginning of the signal, when it picks up of the momentum indicator, 12 pips below that will be your entry signal. And basically what this system is trying to do here is it's trying to get confirmation that the momentum that is getting picked up here in the bottom indicator has really followed through. So that's why we're putting a delay in the entry. In order to get some more confirmation that the momentum is really going in our direction. So what that yellow line then does, and I'll do that for you now so that you see how that would look in real, if it happens right now. So what you get a yellow line here, which then tells you to place a pending order at that level. So you would then simply, for example, if you use MetaTrader 4, you would simply right mouse click on trading, and you would click on, in this case it would be a sell stop, right? It doesn't give me that option because of course price is broken lower already in this particular case. Whoops, sorry about that. So in this case price is broken lower, but you would click here basically where the line is, trading, and then it should sell here sell stop, which basically means that as soon as price hits that level, the order will get filled and you're in the trade. It will also plot a red line, which you've got red dots for, which would be 12 pips away from this line. 15 pips away from the line, from your entry. So that would show up as a red line like so. And that's telling you where your stop would go. And it would then also plot a green line where your first target would be. So basically, it gives you time to set your pending order. Once the order gets filled, the yellow line switches to another color specified, obviously in your settings. So originally it's white, which means essentially that now the trade would be active. Then price moves, and once the target gets hit, it then also automatically moves the red recommended stop loss line to, say, break even. And when it hits a second target, it moves the line further to, in this case, it was this point, I think. And so essentially the trade would go on until it either will continue to set the next target, I think the same amount of distance. So in this case, it would be 30 pips. Or either it will stop you out with your trailing stop. And in this case, it probably just about missed the second target and then gone back up here, and it would have stopped out here in some profit based on your trailing stop. Now, so the reason why the system has a default setting of like 15 pips stop loss and 30 pips target is because it's trying to recommend a 2-to-1 reward to risk ratio. So you're trying to aim for twice as big a target as your risk, and hence that default. And it's obviously, if you use 50 pips stop loss and 100 pip target, that would also be a 2-to-1 reward to risk ratio. But because we're dealing with small time frames, it's better to stay with smaller targets. So this is really the core essence of it. And I can just show you now a bit how that would have worked historically. So in a way, it's showing you the history here. You can see we have first the yellow dotted line, the original stop loss here of the signal that started at this vertical line. Then the order obviously got filled. We had the white line appear. Then price moved down. Here was your original target. You see these two green dots just above the line here. Once that was hit, this stop loss was moved to here. Hence, you've got the red dotted line here. It moved further down. Obviously, if you could have exited manually once you had further target, because in this case, you would have been at a 4-to-1 reward to risk ratio. So that would have been quite a good time to pull out manually potentially, especially if it comes so close to the target. And then, yeah, it got stopped out, and this is the end of the trade, hence no more dotted lines from here. And so ever since then, we haven't had another signal. Why? Because you can see momentum here has built up, and it's starting to fade. It's starting to become less. And until we get a reset, as in price coming back here at least to the 0 line, or even crossing over and then coming back down, we wouldn't get another sell signal. So you can see how it's really trying to catch that initial momentum first. You can then here, for example, if we're now looking at the previous signal, which was a buy signal, which is why you've got a green vertical line. So you have the beginning of momentum here, which is why it's starting to trigger the the mapping of the signal. And so your entry line would have been here at the yellow bar. And you can see how obviously price did not trigger for quite some time. Here at this point, it finally did trigger. And the stop loss would have been here, 15 pips from here, from your entry. Just making sure that that is the case. Yeah, that's right, 15 pips. And initial target was here. And you can see with this move, it actually hit the target. Then it would have recommended you to move your stop loss from down here up to here to lock in some profits. Price then went all the way up to here, but came back down and would have stopped you out here with probably a one-to-one reward. Or you, if you wanted, you could have exited somewhere closer to up to the previous target. Now there are some instruction videos that come with that tell you all of that, how the system works. Once you get the indicators, there's several videos that explain all of that in quite nice detail. So what I want to focus on mainly today is to give you actually some additional tools, what you can use then in addition to, in a way, refine the system and possibly even make it better than just following the signals as and when they appear. So this, what I'm just telling you now, for example, is what I meant earlier here, that basically it's, you just follow it based on the statistics that, and you rely on it that it's going to create enough more wins than losses. And the other refinement options was what I will talk about now. So there's like 6 points that I've thought you could incorporate to make it possibly a stronger system yet. And some of it is already mentioned also in the videos that come as a default with the system. But some of things I've also added myself. So let's start talking about those, unless there are any questions right now. Is everything clear to everybody? Just waiting to see if there's any questions appear in the chat, but if not, I'll continue on straight away. Okay, so no questions. I'll just continue then. So, okay, my first tip, which is actually already shown here, is that I would only use this for short-term signals myself. Because if you like go to higher time frames, what you start to happen is in order for price to create a signal, everything is obviously on a bigger scale. So your targets will be bigger, your stop loss will be bigger, your delayed entry will be bigger. It basically means the price, in order for the trade to go right, has to cover more distance. And because it's a simple momentum-based strategy, price obviously will inevitably have to cross through more support and resistance areas. And that's where I think it actually works best to trade it on small time frames on a small scale, because then we're, in a way, have to rely less on price breaking through these support and resistance areas. Because if you're gonna do that and say, okay, I'm going to trade a bigger move, I'm gonna look at a chart and say I'm wanting to catch a bigger swing, then you definitely need to put more analysis in, And in a way, then you might as well trade a different system. But this is really for short-term gains, that quick in and out trades. So hence, I would probably think stick to the 5-minute chart as your main trading time frame, with the settings that are provided in the instruction videos. This is not just in this video, which I showed you here. So if you go to the properties again, those original settings here, 12 pips, 15 pips, 30 pips. So that's the first thing. The next thing on my list is to include horizontal support and resistance levels and trend lines to filter out signals. Yeah, David, that's right. SR means support and resistance levels. So what I mean by that is, obviously, if you just look at a 5-minute chart, fairly close up and waiting for these signals, you're kind of blind to what's happening on a bigger scale. You don't know if there is a support or resistance in the way of anything or not. So say, for example, let's have a look at this trade here, this buy trade, and I will make a marker line at this high, just a white line. So the way you do that is, in order to map out your support and resistance areas, you have to go to a bigger time frame, quite a much bigger time frame, 4-hour chart, daily chart. These are all important, much more significant, obviously, dimensions of a chart. And you can see, what you can do very simply is you take a line and you try to map price levels where there have been multiple reactions to it. So ideally, you want to have precise hits where the candles make a precise hit exactly at a level on different occasions. But a bit of wiggle room, if the candle closes at that line and some other points create a precise hit, that's also fine. So in this case, for example, I can see we had a hit of that price level right here. Then we had several more hits here. They were pretty precise. One pierced through, but that's okay. We have another candle close. The wicks went through, but the candle closed pretty much at this level. And we've got another level here. So to me, this is a significant support and resistance level based on the 4-hour chart. So I'll keep that simply on my chart, and for future reference. Because if I'm wanting to buy and my target area would be kind of beyond that resistance line, then I would probably not take that signal that the strike system produces, because I would be cautious that another bounce would appear at that level. Now, this is of course not the only level, so you can go and try and find some kind of previous support level as well. So here, for example, I'm looking at this hit here, and I'm looking at these several 4-hour candles hitting this level here and bouncing, and in a way here as well again. So you can leave that line in, for example, and that's how you go along. The same thing for the daily chart, and you can see actually quite nicely how on the daily chart, this line that I had drawn, the support line here, based on the 4-hour chart candles, is actually coinciding with the previous support as well here from December 2017. And of course, that makes the level even more significant. The same here. So for example, a strong daily resistance level might be somewhere here, or say, yeah, I quite like this level because I've got a precise hit here followed by many precise hits here again. So this is what I mean by mapping out horizontal support and resistance, and also trend lines. So if we go maybe back to our 4-hour chart, and you can just start to connect. Hang on, it must be in black color. I'll make that maybe bright blue or something like that. So you can just start connecting the tops of candles with each other, and just drawing them. You can actually set that to array in parameters, which means that they will just go on for infinitely in the chart. And you can just set them and see if they eventually become relevant again. So obviously we've got numerous hits of that trend line here. Of course it gets broken here, but it doesn't matter, that becomes irrelevant. You can keep those in the chart as well. And obviously right now it's where price currently is, which is here. This trend line isn't of any relevance because price is far away from it. But I'm just giving you an example of how you can add trend lines as well. I mean, if I follow this trend line, perhaps this might become relevant sooner. So for example, if I show you this here, if price is here, and if it were to continue to fall and it would start to give me a sell signal close to this trend line, then for example, I would be again more cautious to actually use that sell signal, because even though it's not obviously not the most incredible trend line, I mean longest trend line ever, it's still a significant level with quite a few hits. And so I would bear that in mind and see that as a potential support area. And because we're dealing with such small margins of only a 15 pip stop and a 30 pip target, that this would be something that I would be respecting. So, and of course then, so what will happen is that once you map those on a bigger time frame, these lines will just be on your chart. And so when a signal appears, then you will have that as a reference and say, okay, hang on, if the signal is within the area of these lines, then pause for a moment, zoom out, see, do you think there's really enough space, and then make your decision based on that. So that was our first tip. Then the next tip is identify price direction with the stronger momentum on a higher time frame and decide to only trade signals in that direction. So that's another sort of filter you can add. So by that I mean you want to go, say, to the 1 hour chart perhaps, and you want to consider, okay, over the recent period of time, where has been the stronger momentum? Has the stronger momentum been to the upside or the downside? And well, obviously, no doubt, recently the momentum is very strong to the downside. And if we compare that to the upwards moves, there seems to be generally a stronger momentum to the downside. And how can you see that? Even you don't even have to use an indicator like this to gauge momentum. You can just look at the candles, and that's sort of kind of what I'm drawing you to. Let me go to the 4 hour time frame. That might become a bit better because we have more data in a way here. So what you see here, that our red candles, our bearish candles, they have been the stronger ones generally. Whenever there's been a bullish move with creating bullish candles, they tend to be smaller, have more wicks. Obviously, here was the most extreme. The momentum was obviously the strongest, and you can, of course, the momentum indicator is showing this here. But even so, once we had a more significant low here, the move upwards was not showing a massive amount of momentum. So overall, you can just say, okay, the momentum is the stronger momentum is still to the downside. Therefore, in this particular pair and the pound dollar, I'm going to align with that direction. And that's just, in a way, common sense. You know, you don't want to try and go against a dominant force. You want to try and align with the dominant force. So, and especially now that we've got some new candles with strong momentum like this, it's probably wise to stay, for the moment, mainly focused on sell signals as and when they appear. So that's something you can do. You can map that on higher time frames as well, just by looking at the candles, saying, okay, which direction is producing strong big candles and more of them, and which direction is producing small choppy candles like here, like the blue ones here. Okay, then the next point is session timing. So I'm saying here, use strike roughly from 2 hours before London open until the end of the New York session. So end of NY. So what I'm saying here, the reason I'm saying it's best to use it during the London session or the New York session is because they are the main trading hours where you get the most liquidity, the most volume, the most price movement. If you trade during like times like now, for example, it's the very, very start of the Asian session. So Tokyo isn't even open yet. It's just New Zealand and Australia. The moves that you get during that time, they don't have any follow through. They generally just price, like you see here. We had, where was it? So the new day started here. I think New York closed sometime here, around this area. And what's most likely going to happen now during the Asian session or during the coming hours is you'll get some movement, you'll probably get some correction, but price will be more choppy during this time. And when Tokyo opens, you might get a move in a direction, but a lot more often than not, it doesn't have follow through. And because we're looking to trade on these small time frames, looking to catch small momentum, we want to see a bit more consistency than the Asian session usually provides. So that's why I recommend trading once London opens, or a couple of hours before, because you get already some interesting volatility, and or when New York opens. So that's why I've written this here on the time on the sheet. Now I said roughly 2 hours before London open, because like I said, volatility picks up already then, and you often get like moves, like with the exact start of the sessions. There are important transitions, and in a way, if you are in a trade 2 hours before London open, that's fine. But in a way, ideally, I would want to be almost already at least a break even by the time it comes to London open itself, because you can get like an initial, like a jerking movement when the new traders get going, and there can be initially some change in the dynamic. And the same, of course, when New York opens. So London is already open, then at some point New York kicks in, and you tend to get a a change of dynamic then often. So if you've got, for example, an open trade that started during the London session, then I would try and wrap it up, or at least put it to break even when it comes to the New York open session. And then start a new trade if you want, based on a new signal, once New York is open. I hope that's pretty much clear. I can give you also a tip here for a link. So this link here, www.worldtimezone.com/markets24.php. It's a very handy little site because it basically shows you the time of each of the markets. So LSE is the London Stock Exchange, NYSE, New York Stock Exchange, TSE is Tokyo Stock Exchange. You've got a list of them here. They tell you the trading hours when they open, and these labels, once you refresh the page, so if I now refresh the page, you can see at the moment it says New Zealand Stock Exchange is open, everything else is closed, and that will sort of change throughout the day. So this is if you trying to keep a track of the session times, this is a really handy website. Hi Red Knight, you've missed quite a bit, unfortunately, but this will be recorded, and therefore you can listen to it all afterwards again. But you just have to jump in and kind of flow with where we are right now. Okay. Then, tip number 4 for refinement: focus on pairs you personally like and pairs that move fast. So I don't know about you, but I found that there seem to be certain currency pairs or other instruments that just work well for you. So you might find, I don't know, the euro dollar works really well for you, but maybe the US yen you often have not so good results with. Or maybe you find that some kind of cross, maybe the euro New Zealand dollar or something, that you always tend to get good results with that. If that's something the case that you've noticed in your own trading, then use it on those pairs, because I'm not sure exactly why that is. Maybe that the way a certain pair behaves suits a certain person's psychology more, and therefore they get better results. If that's the case, just stick to those pairs. You don't have to trade hundreds of different pairs with that strategy. And the other recommendation is that you also choose pairs that move a good amount of pips. So some pairs, like for example, the New Zealand dollar against the US dollar is pretty slow moving. Like it doesn't move as many pips. Or the euro pound exchange rate is also one that moves pretty slow, whereas generally all the euro pairs move pretty fast, and all the pound pairs move pretty fast. Just not the euro pound, but for example, if I go back to my charts here briefly, the euro New Zealand dollar, for example, generally moves pretty fast. You get a lot of pip movement, so that's why it's good for this system. Or the pound Australian dollar, these crosses, they move well, but of course the two majors move really well too, the pound USD and the euro USD. So that's an extra little tip. And then, okay, avoid small time frame setups during important news events. So it's good that to keep a track on really important news. So go to one of the Forex websites, like maybe Forex Factory or investing.com, and go to your economic calendar and just keep an eye on if there's any significant events scheduled for the day. Obviously, like for example, yesterday we had the ECB, the European Central Bank, interest rate decision, and no doubt we had quite some volatility, and then obviously just a big breakdown. I would personally avoid trading around these times because you get obviously whipsaw and you can get stopped out because we're dealing with these small time frames with small stops and targets. So yeah, avoid around it. You can trade after, or maybe, I don't know, up to an hour or so before the event, but I would stay away from the immediate time around the event. And then here I just made a point saying use the strike signals indicator to backtest different settings until you feel comfortable yourself. So what I mean by that is, like I said, you can, once you get the Strike Trader Elite signals indicator, which I've got already on my chart, which is showing me these previous signals. So here that's what that signals indicator does. If I go to the settings now, so obviously the settings right now are such that you get a signal once the reading of the pulse indicator goes beyond 0.3 from the 0 line. And then the signals are based on these 12 pips, 15 pips stop loss, 30 pips target. Do the back testing, go back and see, okay, how many trades have gone right, how many trades have gone wrong. If you are already working with indicators or like momentum indicators and so on, you can just play around with the target and stops and see if anything works better, right? So if you say, okay, I want to see if I delay my entry by 20 pips and make a stop loss value of 25, oops, I have to do, of course, points. So make that 200, 250, and then the take profit, say would be 50 pips. And you do that, then of course you're gonna get different signals because your entry is delayed and obviously your stops and targets are different. And you just see, okay, do I get better results with that or not? I think there will be more support videos being produced as time goes by. And of course there's also the forum, the Strike Trader Elite forum where ideas can be exchanged. So that's a good place to try these things out. But just to start out with, I would leave it at the initial recommended default, which I have set here, and then just take it from there. Now, see, I wanted to show you an example of how you can use support and resistance levels and trend lines in your trades. So in this euro-dollar trade here, for example, here we've registered a buy possibility from this point onwards, and so it was recommending, okay, you entered a trade here. If you want to improve your signals, obviously, I've talked about drawing these lines. In this situation, what I thought was quite nice, as an example, was we have this. Sorry, I should go back to the higher time frames to show you what I mean. I drew this line, this resistance trend line, based on these touches here, these bounces. So price went down, tested again, down, tested again, down. Here, we started to get a breakthrough and a retest of that line. And price started to establish itself above that line. Now, once you get that happen, And of course, on the smaller time frame, this is what it looked like. On the smaller time frame, oh, sorry guys. So on the smaller time frame, here you've got the white line. You can see the break, the retest. So in a way, I quite like that signal because it happened to coincide with this break of the support, this resistance trend line. And because price was now trading above it, I was thinking, yeah, I'm quite happy to take that signal because there is room to the upside, because this resistance trend line has been broken. And so I was really happy with that signal, and it would have been actually a good trade. So it would have triggered here. Your stop loss was here, and it went up, and pretty much, see, of course, you want to be also present for the trade, you know, right? Price goes up, then you start to get some downward movements coming in, and of course we've got this big news event, so in a way that would have probably meant best not to take it because we're getting too close to the news. But if this wasn't the case, if you just look at it like so, once you start to get quite big momentum to the downside again, and it hasn't quite reached the target, I would definitely move my stop loss manually to break even though the system probably won't have told you that yet because it hasn't quite reached the first target. And that's also doing a bit of manual trade management is also shown in the instruction videos that come with the indicator. So yeah, I just wanted to show you how this kind of works with the support and resistance trend lines that you can map in. Okay, I think that was probably my last tip for the time being. Have you got any questions right now? Could everybody follow me? I'm just waiting to see if there's any comments or questions arising in the chat. See, this was actually quite a good, this was probably quite an excellent trade in some ways. Like, it kept on coming down and down so far, of course, and you've hit like lots and lots of targets here. David, yes, that's correct. I think it's probably best for fast-moving pairs, so that you can get these 30 pip movements, you know, fairly often, rather than it wobbling around like in the middle of nowhere. Also, an important thing is add your spread to your stop loss settings. So if the default is 12, if the default is 15 pips for your stop loss, then you want to add whatever your broker's spread is to that, so that you don't get stopped out too early. So like, say if you have a 2 pip spread or something on an instrument, then you want to make and you want a 15 pip stop loss, then you really have to set your stop loss to at least 17 pips. Also, another thing you might bear in mind is, like, say if the setting, say for example, in this case, you get this move. You get a strong move. So after the news, and then you get the signal, but you can see it seems possibly a bit tight here. You can gauge is there some previous, again, a level just on a small time frame. You don't have to go far back, but you can, so for example, gauge here, okay, where was there some previous resistance that could act as a good stop loss setting. You can see like here we had quite a bit of resistance. So in some ways you could say, well, okay, I know the system's telling me put my stop loss here, but this level slightly higher is actually more a significant resistance, and maybe it's better to put my stop loss here. If there's enough room for my target and I still get a better than a 1-to-1 reward to risk ratio, like at least say a 1.5 to 1, then that's still good. So you can, make those little tweaks. So apply a bit of your own analysis and intelligence to it, and I think you'll get better results that way even more. Okay, well, unless there's any other questions, I think I shall wrap it up for today. I hope you enjoyed that. I will still be briefly around if there are any final questions, but other than that, I'll wish you good trading, and I will, I think, make sure that you get this little sheet that I've showed you here, with my notes as well, and wish you all the best. Thank you.